Imagine if rates were zero today, Bitcoin could be 300,000 easily. Having a short-term view on this stuff is the fastest way to bankruptcy. People are just, they're impatient.
Meet Dan Tapiero, founder of 10T Holdings, a digital asset fund managing over 1.2 billion in capital. With more than 30 years of experience in macro investing, Dan has traded equities, commodities, and digital assets. He was early to Bitcoin and now backs some of the most important infrastructure plays in the crypto space.
This is a very, very difficult market to understand and trade. It makes managing a portfolio in the old world like child's play.
If you think about the growth that crypto is going to have and Bitcoin is going to have, what can an average investor do if they want to join the crypto markets?
It's really easy. You own your Bitcoin and you put it on a ledger, you put it in a vault, you walk away and come back in 10 years. If there's only one thing that you do that. You can do better than some of the greatest investors. However,
What's different this time?
well, first of all,
Then Bitcoin reaches 100K. What's different this time?
what's different this time? Well, first of all, I think the rest of the sector, if you want to call it, I think is not participating as much. I think you have a lot of people who are, disappointed with their ETH positions and other things like that. I think that will all come around. People are just, they're impatient. But also, some of these altcoins that are, still down 60, 80%, some of them deserve to be down that. And so Bitcoin, there's a realization, I think, certainly by institutional money, driven largely by the ETFs, I think, and by the newfound interest in Bitcoin and crypto from the Trump administration, that has really been driving this. Because, if you think about it, the interest rates today, if we put this into a broader macro construct, are 4%. In 21, the interest rates were zero and Bitcoin was 60,000. So imagine if rates were zero today, Bitcoin could be 300,000 easily. And so I think we're heading into a little bit of an easing cycle on the Fed side that will support Bitcoin. But the fact that we're at 100 with rates here just tells you how much general fundamental growth has been happening in the digital world on its own. And part of that also is one other thing. Part of that is also the tariff and the fiscal tightening stuff doesn't really, Bitcoin is sort of an antidote to that, right? There's no government that's connected to Bitcoin. There's no tariffs on it. It's sort of outside of the problems that are existing in the analog world. So that's, I think, also given a little bit of a boost. And the gold price, of course, which has some correlation with Bitcoin because they're both impacted by ebbs and flows in liquidity from the old world, is telling you that also Bitcoin is going to have a run. I mean, don't forget, the U.S. hasn't cut rates. They didn't yesterday, but the Chinese did cut rates and they cut them down to 1.3. The ECB cut last month as well. So I think the global economy is slowing. It's just not slowing to some sort of recessionary degree. It's just slowing. And I think that's going to be very supportive. So I think 100 here is just a resting place. And I've said it many times, in the last few years, we're going to get up to 100 and then we're going to spend some time consolidating because it's a big round number. There are many people who've been involved in Bitcoin for many years that have 100,000 as their target. And so I think you actually have real selling here. It's not dramatic, but it just, it's a number. It's called the big round number theory of markets.
I mean, it depends on who you ask, though. If you were asking Bitcoin investors 2 weeks ago when we were swimming around 75K, what was going to happen. I think majority would have said it's the end of times and we are finished with this cycle. And just in a mere 2 weeks, the day after the Fed didn't do anything, all of a sudden the entire crypto market started to take off. What did we miss from the Fed meeting yesterday that caused this move? Or is it just we were waiting for the event to come by?
I don't think I don't think Bitcoin trades that tightly with the Fed. Like, I actually think the Chinese interest rate cut
Mm-hmm.
has, if you want to get into real minutia, okay, like having a macro thing impact the price of Bitcoin on a day-to-day basis, to me, that kicked off this little pop here. And the Fed didn't say anything or do anything. And the 2-year note's still at 379. And Scott Bessent last week said, look, the 2-year note is telling the Fed what it should be doing. That's the Treasury Secretary. So,
Yeah.
in a very subtle way, saying 4.25 interest rates are wrong.
Yeah, you said that in one of your latest tweets where you were expecting to basically see a drop of 250 bips from here from the Fed.
No, what I said was the Chinese rates went down to 1.3. I said, imagine if the current rates in the US drop down to the Chinese rate. And maybe China's slowing more, it's more severe, but these are the lowest interest rates for China ever. Right. So I just said, imagine if we were just down at 1.3, where Bitcoin would be. For Chinese people, the interest rate is 1.3. Therefore, is very supportive of Bitcoin and gold.
I mean, you mentioned gold and Bitcoin going into a pendulum in some way, and I think there's like two groups that basically are opposite of each other. One group is saying Bitcoin and gold are the same category. So Bitcoin is digital gold, which you are often referencing to as well. But there's also a group saying, no, if gold is going to go down, that's actually going to be a trigger where the entire crypto asset class goes up because people tend to move onto the risk curve. You mentioned that Bitcoin and gold as a pendulum were going up in the previous period. What do you expect from that in the coming few years? Are we still going to see both assets turning upwards, or is gold a
Yeah.
little bit done at this point?
Yeah. I think, look, gold is generally considered a perfect hedge for the old world. So if you have a portfolio of bonds and stocks and commodities and real estate and art and whatever it is, gold has always been a hedge against, geopolitical risk. It's when interest rates go down, the economy softens, there's more liquidity. It's good for gold. When the dollar goes down, it's good for gold. There are many reasons. And gold, acts as, it has its place in that old world portfolio. Okay.
Mhm.
Bitcoin um, responds to many of those same characteristics, but to me is a hedge against everything in the old fiat world, right? Because Bitcoin's number 21 million is limited, and everything in the fiat world has fiat as the denominator. So you're losing your purchasing power over time in all your assets in the old world. So as an example, if you look at the last 10, 12 years, the NASDAQ, which people generally think has done well, is down 99% against Bitcoin.
Mhm.
99%. You have lost tremendous purchasing power. It's not that you haven't, done well being long the NASDAQ. You've done well because it's based in dollars. However, in Bitcoin terms, you've gotten annihilated. And so I think about Bitcoin, uh, as external to that system. I think gold is the best hedge for the old world. And gold is also very, very sensitive to changing shifts in liquidity, like when monetary and fiscal policy are doing certain things. And so, or when the dollar is doing something. So it's that overlap with Bitcoin as to why they are trading together now, because you have fiscal tightening strengthening, fiscal tightening in the US with Doge, you know, removing whole departments, cutting back on spending. And then you have the tariffs, which are creating uncertainty. Consumers are not really sure, you know, prices potentially might go higher. They're not sure, but it's definitely slowing down demand. And then normally, and I think we're going to see this now, you have monetary policy act as an offset to that fiscal tightening.
And I mean, if you look at it from that standpoint, I think gold is up like, what is it, 25% year to date. And last year it did another 30%, which is very unusual in terms of regular return for that typical asset class. While on the other hand, Bitcoin is just up 10% or so. Wouldn't
Yeah,
it be like,
I just don't think you can look at it in these shorter time frames. 6 months, 1 year, 2 years. I mean, unfortunately, uh, in the last 10, 12 years, and I know because I'm a gold holder, I mean, gold has gone down tremendously against Bitcoin, against ETH, against Solana, against every single asset, even assets that people don't like within, the crypto world, like Ripple. I mean, XRP is up, not, gold is down 99% against XRP in the last 10 years. I mean, so gold has not maintained its purchasing power against the digital asset world.
so if you, I mean, for sure, yeah, XRP is is not everyone's favorite, I would say. But it has done well in terms of return. But then Bitcoin, when it first got at the 100K barrier, it was solely driven by the fact that Trump got into the office. Then a lot of people became angry that the Bitcoin strategic reserve didn't come around within the first week of him being into the office. And then we basically had a cascade of everything in crypto just crashing down past quarter. Well, today it starts to look like the risk on assets in crypto are outperforming Bitcoin. Is this potentially a shift that is taking place where people feel like, hey, maybe we need to look outside of Bitcoin and start investigating protocols that might make sense in the broader scope of things?
Well, look, again, I think having a short-term view on this stuff is the fastest way to bankruptcy. This is a very, very difficult market to understand and trade. And when I mean market, I mean like the entire digital asset ecosystem, all the various different projects and companies that are in the space. So, look, I think over the next 10 years, Bitcoin can get to 1 million. So it can go up 10 times. There are many other cryptocurrencies and venture projects that will go up more than 10 times over the next 10 years. Now, whether somebody decides that they want to investigate those and then that's up to them. But look, Bitcoin and then maybe Solana and ETH as well are the core assets of the space. And Bitcoin is even alone in this regard because of the fact that the security of the Bitcoin network is so intense and that the proof of work algorithm is so tightly fitting. It makes it, the most secure, scarce, decentralized asset, in the history of the world. So that's something special. Um, but it's moved up a lot already. Can it go up another 10 times in 10 years? Yeah. But for many people who are like 26 years old, and they're like DeFi degens, that's not enough. So I'm not really concerned about that. Like, I'm not really interested in, my funds don't really focus on what is going to be the absolute best performer. We want to have a broad exposure to the digital asset ecosystem, digital asset economy, that over a 10-year period is going to drive the results of the funds. And hopefully over 10 years, we can make a 5 to 10x return. I don't need to outperform Bitcoin or I mean, it doesn't matter. My focus is over 10 years, invest in the growth stage companies, the larger companies already making 40, $50 million in revenue, investing in them to make a 5 to 10x and to have the structural changes in this world driving those returns. And of course, they do that with a lot less volatility. Bitcoin is great, but Bitcoin is going to have bear phases that where it's going to go down 60 to 80%. And the funds that I invest in our portfolios don't have that same volatility characteristic. They were, my funds weren't down more than 10 to 15% from the absolute peak in 21. Now we're going to underperform in a bull market, but we dramatically outperform in bear markets because I have a 10-year holding period. And my thought is, I just want to be stuck in. I don't want to get blown out during these bear phases. The volatility is very real here.
Tell me about it.
Yeah.
I'm in the markets for 8 years now, and especially if you go on the risk curve and start betting onto altcoins to become the next Bitcoin, it's going to be tricky, right?
Look,
Um,
I've been in the markets for 35 years, literally. Okay. And these are the most difficult markets to analyze, to understand, to trade, to risk manage of all time. Okay. It makes managing a portfolio in the old world like child's play, honestly. I mean, I that's why I don't have a hedge fund. I was in the hedge fund business for 20 plus years because the amount of energy and intensity and everything else to do that well, I think is extremely difficult. Um, having monthly liquidity or quarterly liquidity will kill you in this space. So the only way I see to be able to maximize your return and your wealth in this space is to have a 10-year life fund. And I want to invest. I don't even want to invest in venture because venture is scary. And you make 10 investments, 9 go to 0, and you're praying that that last one is Google or something. I I don't have, programmers and cryptographers. I'm not taking apart every blockchain and, looking through every use case and which chain's going to be the best for this and getting involved in pre-seed or seed token deals. I mean, that's crazy. Now, there are people out there who are very good at that and they will make a lot of money, and that's wonderful. But my focus is on the more developed later stage businesses. And we're starting to get into growth stage protocols now. I call them growth stage protocols. These are protocols, cryptocurrencies where there's no equity, but where the revenue from the business accrues to the token, right?
Mhm.
Like Aave, as an example, would be a perfect one where they're making, I think over 100 million in revenue. You can buy it for a reasonable multiple. And we apply all of our traditional valuation metrics to looking at, we'll have a small basket of tokens in our fifth fund that we're, in the midst of launching soon. So I really care about risk management. I really care about like path dependency. I don't need to be the single best performing fund. I think what Saylor is doing with strategy is fantastic, but it's a little bit outside of my risk zone.
I
It just
mean,
is.
he just takes a very big bet, which is fine.
I'm
He's
glad.
happy
Maybe
to do so.
what's that?
He's he's happy to do so if he's just taking such a big bet on Bitcoin. Until date, it worked out perfectly, but I think I couldn't handle the volatility on having Bitcoin in such a big portfolio as he has. But anyways, I think you invest into companies and now protocols, as you mentioned. Why and what are people misunderstanding of the venture capital space or the private markets that they should be understanding? As there is some sort of very negative vibe surrounding you and I being in this space, funding companies to grow and driving adoption forward.
Really? You feel this? There's a
Yeah,
negative,
I feel that.
but you mean that the old people in the old world think what we're doing is crazy? Is that what you mean? Not people within
Well,
the digital world.
I think a lot of Web3 people became a lot like very pissed off about the fact that venture capital companies were able to get into a seed round at a very low valuation, and then it got listed at a super high valuation, and there
But
is no
who's pissed
upside
off?
in it.
But who?
The retail
Retail.
investors general on
Well,
social media.
I think I don't get involved with that world very much, but I'll tell you, I think the way these token drops um, have been done, I think it's terrible. I mean, um, these founders of these early stage chains and protocols that this pump and dump thing, it's terrible for the space. It engenders, mistrust and distrust. And I would prefer that everything sort of were done a little more slowly, that it wasn't sort of some get rich quick, Wild West craziness. There are a lot of good projects that get tarred with that, you know, um, brush that,
Hmm.
um, and I think it also keeps traditional money and other money that might be interested from coming into the space. That's why I avoid venture completely, because you don't know, and I don't wanna be involved in some scam or there are thousands and thousands of these deals that are coming out, and I think you need to focus on what you think is core and essential. We have a company that we operate that we bought out of bankruptcy called, Zenrock, and right now Zenrock is launching ZenBTC, which will be the first decentralized yield-bearing wrapped Bitcoin, for DeFi. And so we have a real vision. We believe that our decentralized multi-party computation that we've built, um, MPC is, the next level of security after multisig, that is needed in DeFi, cross bridging. We also think, it's going to be on ETH and on Solana as well. So I think that you know, every person active in DeFi at some point has this fear moment after they've sort of pushed the button to send their money, like, is it going to make it or not? I think that our security apparatus, um, gives people a little more comfort. And
Hmm.
I think that's needed. Like, I believe in that. I've always believed in that concept of decentralized security, decentralized custody. Um, so we're focusing on that. But that's the only venture project, and we majority own it because I believe in that idea. So I think you have to speak to the founders of these projects and really understand, what is their vision? How is that vision going to change the world? And why is it necessary for the world to have their product? And if they can't explain that, which my guess is, more than 90% of the people, then forget it. So I don't really, I try to stay away from that. I let the 26-year-old guys, make 1,000x on some, crazy token or whatever it is. I just think it's counterproductive.
Well, I mean, we try to do that. I'm not 26. I just turned 32, but used to be at that age.
That's the same thing to me.
Yeah, I
I'm
knew you
I'm
were going to say
57.
that.
I'm 57. So there's no difference between 26 and 32 to me.
No, that's true. But I mean, we meet a lot of founders that have zero clue about what Web3 is, have no clue what their token is going to do. And quite usually, if you talk to them, we say, yeah, just start a Web2 company that uses blockchain instead of doing a token. And I think that's what can founders basically change to make it work in the sense that they launch a token. Like you mentioned, protocols that are going to generate revenue. That's a new way of accruing value into a token. But if we talk about that, then mostly those valuations are extremely high and it needs to calm down first. So, how can you balance that as an investor and advise a founder?
Yeah, well, I don't get into advising the founders of protocols of venture projects. I just don't. We're not involved in that. We have 11 board seats on our 23 companies, and these are more mature businesses. They're more mature projects. I look, I think as a founder, and I would discuss this through the Zenrock prism, that um, you have to focus on those three things I mentioned before. Um, what is your vision that is going to change the world, and why is it important to the world? And if they can't answer that, it doesn't matter whether they have a token or they want to apply Web3 to Web2 or whatever it is. There's some cases where a token can be useful, but let me tell you, I mean, it is very complex issuing a token. We spent months doing it the right way, and we have a token, the Rock token, and it hasn't really moved anywhere yet because we haven't announced any new news yet, and we haven't sought to pump it up. There are things that we could potentially do to get the price up, but we're not in that game. We're in the game of we need that token to incentivize validators on our network. And we're not in the game of like, let's make the entire world rich on this and then sell to the latecomers and then have it go down 99%. I'd prefer it just stay flat or where it is until it has, yeah, revenue. It's not just revenue. There's a combination of revenue and then also network effect, Metcalfs and Lindy, right? Because you have value accrue in our world because of Metcalf and Lindy. And some people will say, we don't need any revenue because we've got, you know, 7 million people using our chain. I'm like, well, that's okay. I get that. There should be some balance, right? That's all I'm saying. If there's 7 million people on your chain and you're losing, $1 million a month, that's a problem. I mean, like, there's got to be something you can do to, and there has to be a purpose. Like, there has to be a use, not just some sort of theoretical promise, right? So I think that, and not everyone, can find something that's essential, right?
Doesn't
And
have
maybe
to.
and maybe you don't. I mean, maybe you can copy somebody who's doing something great. Like there are probably 10 or 15 centralized exchanges, right? There's Coinbase, there's Kraken, there's Gemini. They all do different things. They do certain things better than the others, right? They there isn't only gonna be one exchange, okay? It's just the same thing in DeFi. There isn't gonna be only one yield provider. There isn't gonna be only one, you know, uh, place where swapping is, you know, most
Hmm.
advantageous. There isn't I mean, there are gonna be multiple places for borrow and lend. And so, again, you can have multiple projects, but the founder of a early project really you're in VC, I feel like you're really betting on that guy to execute his vision before he's even developed anything. And we're just not in that business.
Yeah, I can understand from your perspective that that is probably a little too early. And I mean, if you talk about use cases and making tech work, I think even Ethereum is really trying to battle and make it work so we can start getting into the next stage. I mean, this week we had the new launch of Pectra taking place, which is a big step forward. And actually, today Stripe announced that you can now do stablecoin payments through Ethereum,
Huh.
which, in my opinion, is putting Ethereum back into the battlefield of hey, we can start doing some actual adoption and some actual work. Where do you position Ethereum in the entire ecosystem as it's been the black horse quite lately? During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin.
So I think you're right about Ethereum that they are doing things now the right way. They are trying to focus on a use case. I think at consensus, maybe there's maybe there isn't as unified a message. I don't know. Um, but Ethereum is not going away. I think people are just frustrated with the price performance. And, look, clearly revenue, some of the L2s have pulled revenue away that normally would be on ETH. But like all of the stable coins essentially are on ETH, right? There's so much NFTs, there's so much that sits on ETH. I don't think that's changing. Okay, Solana's pulled away some activity, L2s, but um, ETH is massive network effect, massive Lindy. I just think the value um, is biding its time here. And this is the way markets work. I mean, I always say markets frustrate the greatest number of people as often as they can. And so this is a classic situation of, everyone's given up on ETH. It's terrible, this and that. It's still around 2000. I mean, when we bought ETH in 2019, it was at like $300. It's still up 10 times. Okay, it's not as much as Solana or as other things, but it's not terrible. And there's hundreds of billions of dollars of value there. It's just that, on X, there's a lot of emotion. There are a lot of young people. They're also very leveraged, some of them. Some of them get long ETH very leveraged, which I don't suggest at all. Um, so I think you have to separate yourself from the emotion and separate your own emotion from all the emotion in the space. And I guess the only way I do that is that I feel like I'm such an old guy. None of it affects me. I've like been through many different cycles and many markets. And I don't really have any emotion about it at all. So I think nothing has changed at all with ETH. Okay, maybe a few other chains have eaten their lunch, maybe, but this is a natural cycle, right? There's going to come a time in this cycle where Bitcoin underperforms, right? Right now, Michael Saylor is driving Bitcoin. He's driving corporate adoption. And on the money management side, companies like Blackstone are driving adoption vis-a-vis the ETF. But just wait a year or two, and all of those companies, all of those people, they own their Bitcoin, and it's going to go up nicely. And they're going to say to themselves, what's this Bitcoin really all about? Okay. And then they may try to read the Satoshi white paper. Maybe they start doing some other reading and they're like, oh, this is really interesting. This is a network. It's a security network. Look at all of these interesting things that are being built onto this network. Why is this the most secure decentralized network that's ever existed? And if it is, why doesn't it have much wider application? And then they get to the point where I think eventually I got to, which is that eventually all things of value, and certainly all money will sit on a blockchain and reside in the digital asset ecosystem. And so we're living through this transition period. Um, and I think that's happening. And so all these people who are buying Bitcoin will eventually come to understand that there's a very vibrant, very fertile ground in this digital asset world where there are a huge number of opportunities. There's also scams and bad people, and it's like the Wild West. I always say, I feel like it's 1840 and I'm a pioneer and I'm crossing the country and I've got my wagon and my horse and, my horse dies. I get attacked by Indians and, it feels like, but you push forward. And I think that that's, very much the world that we're broadly. And Bitcoin is the leader.
How is this period that you're discussing about like pioneering compared to the dot-com bubble?
Compared to what? I'm sorry.
To the area where we had the dot-com bubble taking place.
What I understand what
Back
couple?
in the 1999 2000 period where we had the dot-com bubble taking place and the
Oh, the
internet coming up.
Dotcom bubble.
Yeah.
Well, the Dotcom bubble happened. I mean, it was a sort of realization moment for the fact that the internet was going to change the world. So prices got very elevated and crazy. Um, and then collapsed, of course, and went nowhere for 10 years as, the use case that was priced in 20 and 99 as the use case for the internet filtered through to the rest of the economy. So you could argue it's very similar. We have these little mini subsectors like call DeFi, let's use DeFi, summer or DeFi spring, whatever it was in 21, an explosion in the price of things, and then a collapse and a movement sideways. And until the use cases became more obvious, and we've had an explosion again. And again, everything in crypto happens 10 times faster than everything in the old world. 1999 is a whole generation ago. Things were going at very slow speed. So you might argue that like the entire DeFi bear market is over. We're about to have another huge explosion, and then we'll have another, sell off after that. But in terms of where we are, in terms of broad adoption, I think that we're probably somewhere like in the early 2000s in terms of, broader general adoption. I think the number we have is 6% of the world have crypto accounts or wallets. And I think, 6% of the world had access to the internet at some point in the early 2000s. I think so that's where we are. Like the adoption rate of the internet has been tracking the adoption rate of crypto. But just think about it even more simply than 99. Like the internet, the internet was essentially the digitization of ideas and information. And Bitcoin and blockchain is the digitization of all value and money. And so as an investor, this phase to me is much more important, much more valuable than the previous phase. So yeah, we got great companies coming out of 99 and afterwards, but they're selling something not as valuable as what's being sold in our world, which is money. So I think, that's the name of my new fund, 50T. 10T was my first fund. That was 10 trillion. That was a view that the space would 30x in 10 years. That was from 300 billion initially to 10 trillion. But now I think we go to 50 trillion. Bitcoin can go up 10 times in the next 10 years to a million. I think the altcoins then can be worth about 10 trillion. And then also in that world, all the equity of the businesses and all the value that is moving around in the new Web3 or Web4, whether it's AI powered or not, but just everything in that digital world that has value, I think is another 20 trillion. So that's 50 trillion, 20, 10, and 20 equals around 50 trillion. And if you look at what total world assets are, which is 800 trillion today, you're still only going to be 5 or 6% of total, world assets. So I am not even feeling like it's that bullish a call. But that's tremendous growth in a world where it's hard to find that type of growth.
If you think about the growth that crypto is going to have and Bitcoin is going to have, what can an average investor do if they want to join the crypto markets? Bitcoin isn't going to make you a millionaire.
Well, it might.
Well, if you have a large amount of money, then perhaps, but
Well,
if you
it
are
can
a
go up.
smaller investor.
It depends what your holding period is. I said goes up 10 times in 10 years.
Mm-hmm.
Uh, I think that's a lot. How do you,
It
I
is.
mean, let me tell you something. The greatest investors in the history of the world don't have investments that go up 10 times in 10 years. So, you can do better than, some of the greatest investors are not going to get you rich. I don't know what that means. I think, you can't be excessively greedy because then you lose it all. But I mean, I don't know. Maybe I'm just an old guy and that's an okay return for me. But it's really easy. You own your Bitcoin and you put it on a ledger, you put it in a vault, you walk away and come back in 10 years. Um, look, I mean, yeah, and I think if you're an unsophisticated investor and you're not interested in the space, If there's only one thing that you do that. If you're 23 years old and you want to make your fortune in the space, you buy your Bitcoin, you buy your Ethan, little Solana, and then you start, experimenting and you start learning. And you can make your fortunes here. There are tokens that go up 100x, that go up
Mhm.
500x. And if you do the work, you can find them. It's just, be prepared to do a huge amount of work and deal with a huge amount of volatility, which is okay, but be prepared.
I mean, if you want to invest into smaller protocols, then you need to accept 99% drawdowns or even 90% drawdowns, I suppose. We're coming up to the end of of your time, so the final question that I wanted to ask you is, outside of the Bitcoin ecosystem, what is a vertical or parts of the crypto ecosystem that excites you the most for the coming, let's say, 2 to 3 years?
Yeah, I'm going to talk my book a little bit here. We haven't talked so much about this, but the Trump administration has been the second most important development in the space since its founding. The first, of course, is the Satoshi white paper published in '08 and then '09, sort of it took off. Um, there is not, I mean, this is the first time that we've had a large real government, and certainly large real government of the wealthiest country in the world do a complete 180-degree on the crypto blockchain space. I had companies that were being sued by the SEC 9 months ago, and now all those suits have been dropped. We were being under attack. We were under attack during the entire administration under Gensler. That's all gone. And in fact, the White House, the administration has said they want to make the U.S. the crypto hub of the world, the crypto blockchain capital of the world. And so, in my view, the way you do that is all of the more developed companies that are real, that have revenue, go public and list on the NASDAQ or the NYSE. That's the way you make us the center of the world. Yes, important to have a regulatory framework. Okay, so developers can come. Important so that banks know what they can do with stable coins. Okay, I got all that. But you become the capital of the world when you have 30, 40, 50 crypto blockchain companies, making hundreds of millions in revenue and billions in some cases, available for the investing public. Americans, don't forget, love to own cash flowing businesses, right? They want to own a cash flowing business. Um, and they want to own a management team and they want to have a balance sheet and an income statement. And I think the fastest, easiest way is for the US to promote those companies to go, to list. And not just American companies, but to have the foreign companies list here too, like Ledger, as an example, which is a French company. And I think it's extremely important, especially for our space, because it creates a validation. Our space has the problem. FTX and Bankman-Fried pushed the space back tremendously in terms of, us marching towards, validity. We
Mhm.
lost a lot of trust in the last bear market. Every bear market, we lose trust. But larger investors, okay, and that's 99% of all the capital that's in the old world, they can trust and they do a company that has to go through all the filing and all the regulations, et cetera, to become public. So that's what we need. We're lacking in credibility because every time something great happens, some idiot in the space decides to be fraudulent, decides to be bogus, and it hurts a lot of people. Celsius, BlockFi, I mean, go on and on and on, right? So thankfully, we passed on all those deals and more. And so, you know, I I think that, like, if you ask me, what am I most excited about? Well, I think we have, potentially 5 to 10 companies that are going to go public or get SPACed or be an M&A in the next 2 years. In fact, you know, we have one that's going public next week. So we're excited about that. And, the big deal that was announced today, that was also us that we're involved with. So I just, I'll leave you with this. I mean, I say one thing. I say look, I don't know anything with a 99% degree of certainty. Okay. But I do know with a 99% degree of certainty that within 5 years, Coinbase is not going to be the only large public crypto business out there. And I think our portfolio and the portfolios ahead of us are the ones that are the leaders and, are going to become public. So I think we could have a little bit of a mania for the equity of these businesses.
Well, thank you for your time, and also congratulations on the deal that came
Thank you.
live today. I think the fact that you're investing in all those companies is supportive for the entire industry, aside from the financial aspect, but
Thank you.
it's driving adoption forward. So I'm trying to be that 26-year-old and getting the next 100x. Maybe with some of our portfolio companies, I'll ring you one day if we exceed it to a bigger stage.
I would only
Um,
hope so. Yes.
Thank you very much for your time, and I'm looking forward to be having this conversation in a year or in 2 years and see where the markets are at. Where can we find you if we want to read
Well,
or
on X
listen
is
to you?
DTAP Cap. I'm on X is DTAP Cap. On LinkedIn, I'm there under my name, Dan Tapiero. You can also go to the website. We have 1rtfund.com, and then also there's 10T Holdings. So I have both of them. And the new fund is going to be called 50T. So soon that'll be rolled out, but we've just started on that one. So all very
Well,
exciting.
hopefully we're going to reach 50T at some point. Anyways, thank you very much for joining the podcast, and
My
I'll see you
pleasure.
again soon. Thank you.